exactly what to do, Terry?
Thank you so much, Mike. Well, we've got Philip Mwema, Managing Partner with Nexus, who will be taking us through a step-by-step guide on how to file our tax returns and some of the things that we must know, and perhaps that's where we need to start. As an employed Kenyan, what are some of the things that I must first think about before I file my returns?
As a Kenyan employee, the first thing you must think about is simple. Your monthly payslip that your employer gives you actually has some relevant detail. It has the PIN number of the employer and the PIN number of yourself as an individual. Okay. So you must then have your monthly payslips with you, and at the end of the year, you should go back to your employer and ask your employer to give you a summary of the taxes for the whole year, and it's a form called a P9. It's a form that summarizes the income that you've earned the whole year, the taxes that have been paid, the release that have been granted to you, and with that form, that then becomes the beginning point for you to begin filing your taxes.
All right. Yes. So once you have your P9, you have clicked on the iTax website, which has been constantly up and down for the last few days. Kenyans and our last-minute mentality.
We're unique as Kenyans. We love things last minute, and that's who we are, I think, as a culture. The iTax, I'm aware, I think the iTax is a brilliant thing that the Revenue Authority has introduced, and kudos to them. I think they do appreciate that we are last-minute people as Kenyans, so there is need for KRA to expand the bandwidth and the speeds.
Yes.
Because the next 7 days will be helter-skelter. But again, I'll give credit to KRA because I think they've even gone to Huduma centers, so they've increased the access points where Kenyans can file tax returns. The thing is just need to increase that bandwidth so that it is an IT system. It will get uploaded and it will get busy and traffic, and it's bound to crash when we are all trying to log in because it is a system.
Okay. Yeah. So where do I start?
Simple. So you go into iTax and log in with, first thing, your PIN. And in fact, just before getting on set, one of the individuals was asking me, where do I get my PIN?
And that's one of our cameramen in the studio.
Almost somewhere in Umoja will be asking, this PIN Mr. Mama is talking about,
where is it?
Where is it? And where you get your PIN, your employer, the payslip that your employer gives you as a PIN. Because if an employer pays you without a PIN, each and every payment that the employer makes without a PIN, he's charged a penalty of 2,000 shillings by the KRA. So more often than not, employers do have your PIN, they request your PIN for the individual. So get your PIN. Then you log onto the iTax page with your PIN and a password which is generated by the system. And when you go through that, you'll get into an Excel spreadsheet, and the first thing on that Excel is general information. And this general information, it's important because that's when now it identifies you. You put in who is your employer, the employer's PIN, your individual PIN, and then it asks you questions about what is your source of income. Do you only have employment income? If you have side hustles, you also ideally meant to bring them on board. Okay, so what's your employment income? What's your side hustle business? If you've got rental income as an individual, you're also supposed to declare that onto that page. It also goes ahead and requests the details of your landlord. If you have those details, it requests you to put in that. It requests you to put in details of a tenant if you're a landlord. And once you fill in that first page, the next page that goes through onto KRA is now where you put what we call your taxable income. Yeah? And on taxable income, you pick your gross salary without any deduction. So I'm paid 20,000 shillings a month before taxes.
Yes.
That's a figure that you pick it.
That's a taxable.
That's a taxable figure that you put in and put in onto a cell. Then you declare other income if you've got other income, and it's pretty straightforward. In fact, if you look at that form, I call it, it's the simplest form. It's an ID10T form.
You know how Kenyans we are with numbers. You know, it doesn't look as simple as you say.
That is true. So you've got the first form where you put in the gross income. Then the second spreadsheet goes ahead, and this way now you've got your release. Release as an individual, where you put in, if you have a mortgage, your mortgage is interest relief, your home ownership savings relief if you have that, your insurance relief if you have that, your personal relief, that goes in there. And then once you put in the release, the next thing is calculate your taxable income, which if your only source of income is employment income, then you've got no further tax to pay to the KRA.
So it should be a pretty simple.
It should be pretty simple.
Filing.
Click, it uploads, it goes into the system.
So what are the implications of not filing or filing late?
Okay. If you don't file for an individual, if you file after the 30th of June, there's a penalty of 1,000 shillings. But the way the law is what it says, the penalty is 5% of the unpaid tax. But because all your tax has been paid through pay-as-you-earn or pay-as-you-eat on a monthly basis, you've got no further tax. So the maximum an individual can pay in penalty is 1,000 shillings. However, for companies, the penalty is a bit higher. It's 10,000 shillings for late filing or 5% of the unpaid tax. But again, for companies, they'll have paid taxes through the installment taxes. By the time they come into June, there is no further tax to pay.
I also understand that if you do not pay, or if you do not file your personal returns, and you're a director of a company, you cannot also get your tax compliance certificate.
Now, if you're a director of a company and you don't file your returns, as a director of a company, you're required to get what we call a TCC, a tax compliance certificate, which shows that you've complied with the relevant taxes as a director. And it's a very smart thing that you ask the directors if they are compliant on tax before you give
them the tax compliance.
The tax compliance, and also before you give the company. So now they've gone ahead and said, before giving a company a tax compliance certificate, let us look at the directors and make sure they're tax compliant. And that now becomes in, I mean, right now, on all public vetting jobs, you require a tax compliance certificate on the public jobs. When companies are going for public tenders, you require a tax compliance certificate. So it is important that you file your return within the next 7 days using the iTax portal.
All right, thank you so much. That's Philip Mwema, Managing Partner with Nexus Business Advisory, giving us some tips on why we must file our returns before the 30th of June. Philip, thank you so much for your tips.
You're welcome.